to Green Pips FX, and on today's video, guys, I'm basically going to be breaking down this simple 5-minute day trading strategy that I have. Now, what you're seeing here on my screen, this is an indicator that I sometimes use, right? It's a session indicator. It only allocates the open and the end of each session, right? So as we have here, right, we have this box here and it's written A, right? So this A, it's the Asian session, right? So it opened here and it closed here, right, at the beginning of the box. So it just draws out the overall range of each session, and it also allocates the number of pips that the market moved during that session, right? So when if I could just go back here, you can see that we have another box here and it's written N. So this was yesterday's New York session and the market moved 29.4 pips, right? So this is just the simple use of this indicator, right? And the name of this indicator is FXN, Asian range, Asian session range, right? So that's the name of this indicator, right? If I could just go there, you can clearly see here, right? This right here, FXN Asian session range by Rob Minty, right? So that's the one. Now, how do we use this to our advantage, right? So first and foremost, when you're trading, we need to know two main things, right? First, we need to know the trend, which can be analyzed by the structure, right? So if we just go a little back behind here, we can now clearly see that we have a bullish trend, right? We have a bullish trend. Price created a high, a low, a high, a low, a high, right? And that's when the day ended yesterday, with this right here, right? So New York opened here and ended here. Now this was off session. Why? Because this is Euro USD pair, right? And it's a pair that consists of a Euro, which is a London pair, right, and a USD, which is the New York pair. So the only valid time to trade this pair and, you know, have a significant move in the market is basically the London session and the New York session. Out of that, it's best to just stay back and let price do its shit, because every time price moves outside of a session, it's only creating liquidity, which will be taken when a session opens, right? So what we had is that we had this low here. So let me just break this down. We had a low, we had a break of structure, and we had a high created from that break of structure. So the next thing that we know is, of course, we need to find an area of demand that requires mitigation and actually consists imbalances above it. So this right here, this is my area, right? This last buy candle before the sell. And as you can see, it had tons of imbalances above it. So price came down, and of course the session ended here, right? So this right here was a non-session move that just came to fill the imbalance and also left a liquidity low right here, right? So this low here is liquidity, and below that liquidity we have an area of demand, right? So of course this is simple inducement. Dumb traders already started buying here, placing their stops below this wick, right? And what happens? Price moves on, so there we have it. The Asian session comes into place, right? And we know above and below the Asian range we have what? Liquidity. So we technically have buy side liquidity on top of it, and we also have sell side liquidity below it, right there. So look at what price does. So the Asian session opened here and closed here, right? And then price now pushed bearish to do what, right? To take this sell side liquidity, to give price its momentum, to have that that capacity to make a big move during the session, of course. So once the sell side liquidity is taken, price then comes to do what? Look at this right here. So let me just remove these right there, boom, right? So like I said, that we have this low here as a liquidity low. So after price cleared this sell side liquidity below this Asian range, price also came to clear the liquidity resting below the swing low right here and mitigate this area of demand, right? As you can see, price just taps into, gives an internal break of structure right in here, right? There's an internal break there. Price comes down again for re-entries, and there is the London session opening, right? This new box right here. Now there are two ways you could enter in here, right? So I'm just gonna break down one, right? So in a simple entry criteria, right? You know there's an area of demand, you know that there's a liquidity low above that area of demand. So you could just place your buy limit here. And of course, your first take profit target is this yesterday's New York session high, right? So this is your there, right? So let's just make this a little bit big, right? NLR, next liquidity run. So this is your first next liquidity run. However, you can still hold this. How? You can just wait for price to reach here, take off maybe 40% or 50% or 80% or 90%, whatever amount you want to take from there, and place your trade at break even. And from there you could just hold the rest for new prices, as you can see, right? So so this right here could just be a, you know, a regular risk entry, what we call a risk entry module, right? And your stop loss is technically just below the S&D zone, right? As you can see, price has no reason to come below this area here unless it's reversing. That's why we're placing our stop loss there. Now, the next entry criteria, that's reserved for the guys in the mentorship. However, we refine this to a very in-depth level, right? What we trade is, you know, would normally wait for price to make its move into this mitigation here. And from there, we could now see we can now seek for confirmation in the lower time frame. Of course, we could go to the 30-second chart or even the 1 minute, the 15-second. They're both fine for that. And we could now seek some certain indications of confirmations, and from there we could take a very high RR trade. And you know, it is what it is. That stuff is for the premium guys, and I wouldn't like to break it down right here in front of y'all. Now, however, this right here, as you can see, it's a very profitable trade, right? So we have about a 4.3 pip stop loss with a 24.2 pip take profit target. However, this is your first take profit target, because we know that in a session, the market makes a big move. So this is just a protection area, I would call it, right? Now, as you can see, price currently is, you know, running crazy from there, like I said, and we're now currently at 61 pips, right? So the market is currently at plus 60 pips, right? So this is like 63 pips, right? So from there, we up to now, this trade is about a 1 to 14 RR trade, right? The session, it's only mid session, right? And of course, we're looking even for more continuations during the New York session, right? We could just have a slight pullback and then a continuation. And then this RR could end up being very, very, very crazy. Now, with that being said, guys, I hope you enjoyed the video. I hope this information was very informative to you. You know, if it was, then don't forget to like, subscribe if you haven't, turn that bell button on for notifications. And until the next time, guys, stay safe, have a nice trading week, and of course, peace out.